Hello, everyone. Welcome to the webinar. As Dave just said, I'm Scott Welsh, and we're going to talk about a trading truism that maybe you've heard. Every time I do a webinar, the goal is this. I'm going to try to give you something that day or that night that you can actually use by the end of the webinar. Something, either maybe it's an insight or maybe it's an actual back-tested system, which we have some actual back-tested data for you tonight. But anytime you hear me talk, I love talking about trading. I love trading, obviously, is why I'm here. But we're trying to give you something that you can take with you, or at least maybe that's the one thing that leads you down a path, and maybe a week from now you tweak it and do something similar. But I'll always try to give you something every single time I'm on the microphone that hopefully you can use. Now, I don't know if everyone here has ever heard buy when others are fearful. The very first things I started reading back in 2004 when I decided I wanted to be a trader, most of the stuff I read were Warren Buffett books. And that's a Warren Buffett attributed quote: buy when others are fearful, buy when there's blood in the streets, buy when things are bad. He gets very, very excited when his favorite stocks go down, allegedly. I mean, we don't know for sure. We can only guess on how Warren Buffett does his trading, but he's been extraordinarily successful. Let's take him at his word. But as I said, I like to take things that maybe you heard coming up, or maybe everyone repeats, or a lot of times traders repeat things back to each other. And what I've found is that sometimes it's true and sometimes it isn't. And sometimes people are just regurgitating these tired old sayings and they don't actually make your trading better. But we're doing the opposite of that tonight. We're taking this famous phrase, buy when others are fearful. We're going to try to put some math to it, some rules to it, very simple rules, and see if there's anything to trading in this manner. And spoiler alert, it's a good idea, right? All right, let me move on now to the disclaimer. The stuff, it is a back-tested system, as I mentioned, so there will be facts and figures in this particular webinar. I love back-testing. I love back-testing. So a lot of times you'll hear me talk about back-tested systems. Now, those numbers are hypothetical. They didn't come from an actual trading account, so keep that in mind. Do I try to make the numbers accurate? Of course I do, but they are hypotheticals. These aren't trades that I actually took, and we're going to go back in time a little bit anyway, so clearly I wasn't taking them back then, right? But don't risk money you can't afford to lose, right? And let's get to it. Three things we're going to talk about today, and maybe even more, is that famous phrase, buy when others are fearful. And in our investigation of this particular phrase, we're going to look at, well, what would have happened if you followed this advice, right? Anytime people say, for example, give you a little freebie here, let your winners run. Well, do you have to let your winners run? Really? Are there day trading systems that I've personally tested, that I've personally traded, that didn't let their winners run and they work great? Yes. There's an example, right? Sometimes when you just hear something repeated and repeated, it's like, oh, I have to let my winners run. Not necessarily. But buying when others are fearful, buying when things look bleak, I think there's something to that. And we're going to investigate that, as I mentioned, by seeing what would have happened should we follow this advice. And is there a system? Yes, that's a great phrase. Oh, Warren Buffett's so smart. And he is. But how does that help us? Like, is there an actual system that we can use, that we can try to use this philosophy? All right. I've talked about it before. I don't think it can be talked about enough. In our lifetimes, right, we have this major event that we can study, that we can analyze. 2008 and early 2009 was a once in a lifetime opportunity to learn. Okay. We hear about the Great Depression. Oh, that was in the 1920s. That doesn't help us. How do we know what trading was like in the 1920s? Right? We all have reminiscences of a stock operator, but that was a market that no one can recognize. Well, we have a market that we all were there for. I assume there's no 10-year-olds. Are there any 10-year-old traders here tonight? I'll look at the questions later. I assume, though, if we're in trading, we all were around, or maybe we weren't trading, but we're cognizant of what was going on in 2008. As I mentioned, I started trading in 2004. I was very aware of what was going on in 2008. I was petrified. It was terrifying. I would wake up and I turned on CNBC. Yes, I know you're not supposed to listen to CNBC. I don't base my trading on such a program, but in that time I needed to watch something because it was crazy. Do you remember? Dow is down, S&P is down, and then you come back tomorrow, it's down. You check back in the evening, down, down, down. It was horrifying, right? Now, that was a time when other people were fearful. I was fearful. Maybe you were fearful. Okay, we've seen a phrase. What were we supposed to do in the stock market at that time? When things were going crazy, blood was in the streets, when people were fearful, what are we supposed to do? Well, we're supposed to buy, right? Did you buy? I don't know anyone. I know there are people out there. I know people have made fortunes, right? I just would love to meet and talk to the person who was buying then because I have never met one yet, right? I was petrified, as I mentioned. There was no way. I had accounts. I had a stock account. I had a Forex account. I had accounts. I was not trading. I was fearful when others were fearful. Okay. So, what were we supposed to do? What were we supposed to buy? Why didn't we? I didn't because I didn't because it was scary, right? Why am I going to buy when everything is going down? If it's going down, that's not good. I don't want to be in the market. Now, looking back again, what a valuable resource 2008 was. The truth now, looking back, was well, there was nothing wrong with almost all of the companies. Yes, it was a major catastrophe. As Warren Buffett said, we were about 24 hours from going to an ATM and not having any money in it. I mean, I don't know how close we were to financial Armageddon, but apparently we were pretty close. But the companies, I mean, they're still out making widgets. Restaurants are still serving food, right? Companies were still going. And the truth is, the only thing that was happening besides all the chaos and bailouts and all that, but there were a lot of businesses, lots of businesses where there's nothing wrong. Maybe they had to lay a few people off because of the fear, but these companies were cranking. And the only thing that was happening was that we were getting great companies at good prices. Maybe those are the best prices that we'll see the rest of our lives, right? We should have been buying when other people were fearful. Okay, that's one thing for me just to sit and talk to you. What does that look like? Here is the real life indicator. Well, it's not an indicator, real life chart of Apple. Anybody's ever heard of Apple? It's an up and coming tech company. I don't know if you heard of it. It's a pretty good company. Anyway, 2008, and this is July, so you can see. So August, September. This was when it was scariest. I always remember September. That was when I was most scared, most petrified. If we had bought when others were fearful, right? Little dip there, and then on and on. Went from right around 20 to up over 200. I believe that's a 10 bagger, as we say in the business, right? Buying when others were fearful, that looks pretty good, does it not? And that's what we should have been doing. Well, here's the SPY, the ETF, S&P ETF. Here is that very scary period. Now, the SPY kept going down, 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 even after September. It went down the first of the year. It went down January, February. But even if we had bought here when others were fearful, we would be quote unquote early. But then look what happened, right? Really, until recent weeks, this has been an upward climb since the very moment that we're speaking of. Buying when others are fearful. There is something to it. This is a trading truism that is apparently pretty true. I mean, there were millions to be made, right? But being fearful, as I was in particular, I was emotional, and emotions will not help us solve this problem of pulling the trigger. Well, how are we going to ever do it? If it was so scary and the news is coming out in avalanche after avalanche of bad news, how are we ever going to get in the market? How are we going to press the button? We need simple, boring, inarguable rules. All right. If we have some rules, if we had them then, if we have them now, when things get crazy, there's no reason to be crazy because we have our rules. Just follow the rules. So we know we have a truism. We know we want to follow the rules. Well, we got to make some rules now, okay? What's the simplest rule for using this trading philosophy? Well, Here's how I defined it, and this is what we're talking about tonight. If the market goes down a bunch of days in a row, that constitutes fear. Think about it. If it's down today and then up a little tomorrow and then kind of flat and then down and then big day up and then 2 days, like what is that? Like that's not fear. Like that's just normal. That's a Tuesday, right? That's nothing. But if it's down today, it's down tomorrow, down the next day. If it's down all week, that's when the articles start coming across Twitter. That's when the articles start coming on CNBC, right? It's when it's consecutively. That's true fear. An up day now, here and there, that's not fear, okay? So to try to build our system, we need fear multiple days in a row, right? So what's our system? Buy when the instrument, stock market or anything else, buy when the instrument is down many days in a row. And again, obviously we're on daily charts. Okay, so let's break it down even further. For long trades, right? And you could probably apply it to shorts if you wanted to. For long trades, we're going to buy when the market is down in consecutive days. Well, okay, great. We're getting closer. We've got a system. Well, why 6? Why 5? Why not 100, right? Well, we're going to start with 6 days in a row first. Why? Because in the most recent Stocks and Commodities magazine, it's not the full name, Technical Analysis of Stocks and Commodities. Anyway, in S&C magazine, there was an article by Picard and Maresco, the names of the authors, and it was called High Probability Buy Signals. I encourage you to check it out. It's where I got my idea to talk to you tonight. They said they wanted extreme, crazy, improbable results. In other words, fearful results. So they chose 6. I didn't choose 6. They chose 6. Okay. And they said, okay, what happens if you buy 6 consecutive down days and then you hold it for a certain period of time? If you can't just say, okay, it's down 6 days in a row, I'm going to only hold it for a day. What if we're still in the grips of panic? Right? They wanted to say, okay, I want this crazy fearful event, and then I want to hold it and see if it recovers. And if we wait long enough, if we wait for enough fear by buying and then holding it for a set period of time, we should be able to make money. We should be able to capitalize when others are fearful. Okay. So I program their rules, right? Pretty simple rules. I program them into TradeStation and I put them on some of the financial ETFs, okay? SPY, DIA, QQQ, okay? Let's take a look. Here is the TradeStation summary. Buying when it's 6 consecutive down days in a row, and they held it for about a trading month. Well, obviously there are weekends, right? So I held it for 20 days, 20 bars, 6 days in a row down, hold for 20 bars. This goes back to 2005, and you can see that it did make money, right? So maybe it's not an empty platitude. It did make money. Not super great, right? Not the best thing I've ever seen. Notice there are only 11 trades in 13 years. There isn't that much fear, especially lately, right? There hasn't been that much fear in this bull market for the past 10 years. So there are only 11 trades. Well, we're trading a philosophy. We're not trading statistical relevance. So we can probably let that slide, right? So the SPY was, okay. DIA, about the same, right? 26, 21. Again, 13 years. Drawdown about equal to the profit. I mean, good profit factor. We got 13 trades this time. But again, that's not that much. But if we're going to buy a philosophy, that's something that we could decide just to accept, right? But the Qs, on the other hand, did not work at all. So buying fear on the QQQ ETF did not get us anywhere. In this huge bull market, it did not get us a darn penny. It's a losing system. Well, that's a setback, right? I mean, we thought that we had some sort of philosophical trading truism, and we put it into actual math, we put it into actual code, and it just wasn't that great. Okay, so do we drop it? Is that what we do with systems, right? If you get an idea on a webinar or in a magazine, like I said at the beginning, maybe it is just the beginning. Maybe it's a jump off point. Maybe it's the launching pad to something that's better. Well, I thought 6 days was too much. Again, that was their idea. 6 days, think about that, is Monday through Friday. That's panic. Over the weekend, bad news, people feeling terrible, and then another down day on Monday. That's a lot of fear. And number one, it doesn't happen very much. And number two, it's almost as if that's so extreme that maybe buying at that particular point, you're buying into extreme fear. Maybe it doesn't make as much sense. All right, this is anyway what I was thinking. So, what if I thought I want fear, but maybe not extreme fear? I'm going to use 4 days. That's not quite a full trading week, Monday through Friday. That's buying when others are fearful, but maybe not such extraordinary circumstances, right? I just thought 6 days was a little too long. Okay. Now, we're obviously going to get more trades because we're not waiting for such extreme circumstances. Let's see if that made any difference. So let's look at the same ETFs. 4 days now. Notice I held for 20. No stop loss. Okay. No stop loss, no target. How simple is this? Just 20 bars. Well, profit is double. Okay. And again, I'm only using about $10,000 worth of shares each time. You could use more, you could use less. I mean, this number can be multiplied based on the the size of the account that you have. So it was obviously a lot more money. Maybe we want more money, but that's not the point. Drawdown now is less than the profit, and we did pretty well, right? Buying when others are fearful, only 4 days seems to look better. Look at, we've almost quintupled the amount of trades, right? We went from 11 to 53, right? Percent profitable. Check that out. 68%-ish. That's pretty good. The buying when others are fearful, but not waiting quite so long, seemed to work better on the SPY. How about DIA? Again, we get bigger numbers than we had before, more than double. Drawdown stayed the same, actually got a little bit less, right? Same ballpark, but way more profit and a lot more trades. Now, if you're obviously an action junkie, this is not enough trades to begin with, but this is a daily chart system. And then finally, let's take a look at the Qs. Remember, the Qs were negative. Now look at them, right? Just by not waiting for such extreme situations, we make, what is that, about $12,000 more money according to the testing, right? The drawdown is pretty high. If that were a hypothetical $10,000 account, I mean, that's over 50%. But guess what? Here's a secret. The market was down over 50% in that time period anyway, if you're holding an index fund. That's beside the point, right? But holding for 4 days with a 20-day time to exit is way better. So now how do we feel about our trading philosophy? Maybe we're onto something, right? It's easy to agree that, well, yeah, that sounds great, Warren Buffett, that we should all buy when everyone else is scared, right? It's very, very, very difficult to do that in real life. It's very, very difficult to look at the news, look at the red on the screen, and then go ahead and buy, right? It's hard to actually do it in real life. But a simple system or simple rules can absolutely positively help us along those lines. Now, let's get some finishing up thoughts, and we can have any sort of questions that you like. Bottom line is this. We have something that's been repeated to us. Maybe it's worthwhile. Specifically, buying when the instrument has been down for 4 days in a row and then holding it for a trading month, not exactly a calendar month, but holding it for a trading month, shows that it's profitable. I mean, it was profitable on all three financial instruments that we looked at, right? So maybe there is actually a reason why we've heard that quote so much, right? Now, here's maybe the important part of the presentation tonight. I wanted to give you something that you could actually take with you, right? If we ever see 4 down days again, maybe you want to start getting into a position. Is there a chance in these volatile times where we've had a lot of down markets lately, is there a chance in the near future we might see 4 down days? Yes, I think this presentation is a little bit timely. It's why I wanted to talk to you about it tonight, right? getting interested in taking a trade, whether it be in stocks or whether it be in ETFs, maybe it's in individual stocks, maybe it's in futures contracts like the ES, maybe we need to start getting interested. And 4 seems to be a good number. I did take 4 out and started looking at some individual stocks like the FANG stocks, the Apple, the Facebook, and 4 days looked good for those also. Okay. But you don't have to do it exactly this way. I mean, we can do complicated systems in webinars, but I wanted to keep it very, very simple tonight. You don't have to do it exactly like we do it, right? Or exactly like we're talking about tonight. I would definitely stick to the 4 down days. I would definitely, if you're going to pursue this and think about it in your own trading, I would definitely keep the 4. You could go down to 3, right? As you saw, the 6 maybe too much, right? But again, look at it on your instrument. But let's say 4 seems to be a very good number. Well, what about a stop loss? Could you put a stop loss on it? Yes. Well, what if we went for a target? Yes. What if we want to have a move to break even? Possibly. What if we had a trailing stop? Maybe. What if we had a combination of all those? Might be even better, right? But the point is, if we can get profit on something that makes sense philosophically, if it makes sense to us and the math shows, I think that's something pretty powerful, right? But if we can take a general idea and put very, very simple rules on it, and it pays off in our testing, then I think we have either something very simple you can trade right away or something that you can build off of, okay? Buying when others fearful, not every saying is worthwhile, but this one seems like it is. Now, last thing I'll say, and then I'll open up the floor. Besides all the stop losses and the break evens, and you could use Fibonacci and try to get a profit target there. You could do a trailing stop on a moving average, right? Have a moving average trailing behind if you get into profit and then get out there. Or what if we wanted to do none of that? But what if we took it to a weekly chart, right? Now, I looked at it briefly, and I'll just throw a hint out to you. If you wanted to look at a weekly chart and look at maybe 2 weeks down, and then holding it for a certain time period, or again, getting that stop loss, that target, that sort of thing, that seemed to work pretty well too. Now, do you know anyone, or are you here in this webinar where you could see 2 consecutive down weeks and then start taking trades? I mean, does any trader think that long term? Well, you know, the IBD, the people who run IBD and write all those books, they use weekly charts for their biggest stock winners of all time. So it may not be the worst idea in the world either, right? So buy when others are fearful. I think it's something we should look into, and it's profitable. All right. There's my contact information, and I'll leave that on the screen, and I'll go to questions. Or Dave, if you see anything, or we're happy to answer. Like Dave said, we'll talk about anything you like. See, Guillermo said,